What a difference a day makes. The Nikkei bounced back after Monday's crash, and the U.S. stock market turned around. Let's take it over to trader Tim of Buy Alerts. Tim, great stock market lesson here on why it's important not to panic and to watch the action because the market can quickly rebound.
Where it rebounded nicely off is the key going forward here. The 10-year yield now well below 4% is kind of something lost in the carnage out there, but that I think should benefit stocks generally here. And the Fed, always has that rumored maybe surprise rate cut on further weakness. And then finally, the AI names that were the darlings not too long ago have become kind of the pariahs now. I'm starting to kind of like them. I didn't like them before, as you know, but down around here, I like selling out of the money put spreads on those names to be a buyer on further weakness. And generally, I think with volatility where it's at, implied volatility of the VIX hit, close to 70 intraday on, Monday. I think we have seen kind of that spike that normally signals a low for stocks. So I'm taking advantage of really inflated implied volatility, positioning me buyer on a dip further from here and getting paid very nicely for it.
What's your trade of the day?
Yeah, I think the SMH is one of my favorite, ETFs to look at here. Everyone knows the spiders and the Qs and so forth, but the SMH, which is the semiconductor holders, basically it's NVIDIA, Taiwan Semi, and then Broadcom compose about 40% of it. So implied volatility at extremes, to say the least. So I've been selling out of the money put spreads on the SMH to be a buyer on about 10%. Further weakness and getting paid nicely for it. We'll continue to do that, certainly on a shorter term basis, take advantage of IV when it's up at these levels. I think normally makes a lot of sense.
Thank you, Tim.
You bet. Anytime, Ange. Take care.
Go to businessfirstam.com for where to see our show on TV.